The real numbers that I'm talking about are going to be whatever it is, but will be in a year from now when these monstrous, huge, beautiful places, they're palaces of genius. And when they start opening up, you're seeing, I think you'll see job numbers that are going to be absolutely incredible. Right now, it's a lot of construction numbers, but you're going to see job numbers like our country has never seen before.
Investors are trying to digest today's data while also hoping that the Fed will finally begin cutting interest rates. And the White House expects higher cuts might be on the table now.
I think that the Fed will certainly want to consider, what moves it would make. And I would imagine that when you set an agenda at the Fed, the chairman of the Fed sets the agenda, then they have options that they all consider and discuss. And I would guess that they'll be discussing the main market expectation is 25 basis points. But I would guess that there would be an expectation, a discussion of a higher cut.
All right, Liz Peek, we chewed on this a little bit earlier, but there's a lot of meat on this bone. The potential for a deeper Fed rate cut definitely had the market enthusiastic this morning. Now the Dow's fallen off a little bit as investors are digesting all this. But I want to go back to what President Trump said in that soundbite, because when you look at the numbers and the shift, where the jobs were, where jobs were lost, government jobs went down, the native-born workers went down, but he's talking about manufacturing jobs, that he's saying once these companies start really legitimately setting up shop here and hiring people, that in a year from now, when that happens, you're going to see a boom.
Yeah, well, I think he's totally right. I mean, if the companies follow through with the many, many pledges that have been made to manufacture here, and also, by the way, respond to the numerous inducements to manufacture here, whether it's lower regulations, lower taxes, full expensing of all kinds of investments, cheap energy. I mean, there's a lot of things that really should promote a manufacturing boom in the United States, including what the president has been talking about with a lot of overseas countries. And yes, back to the rate cut, I think it's 100% now that we're going to see a rate cut. I think there's going to be a lot of talk about how, once again, Powell is too late. There have been months of data showing that the job market was weakening. But I will also say I have no idea what the job market looks like. Right now,
thank you.
Yeah, the household survey showed almost 300,000 jobs added in the last month. The establishment survey obviously was very weak. What does it mean? We don't know. By the way, E.J. Antoni is not running the BLS. So for the people out there saying, oh, Trump's guy is going to manufacture the numbers, this is without him. He's not involved. So I just think this is a huge mess, bad reporting, bad data, and I'm so happy someone else is going to actually take hold of this agency.
That would have a huge impact, Brian, and it would leave a big footprint, a legacy footprint for this administration if they were able to do something about this, because this isn't even a partisan issue. This is an issue about making decisions based on data, very important decisions about interest rates that impact consumers, that impact the government and its debt borrowing cost. We cannot afford to have backward-looking data that doesn't give us what we need to be able to make decisions right now.
Yeah, the benefit of backward-looking data is you should know what it is because it's happened already and you've counted it. The fact that we can't do that, and for years, I mean, this is not a new issue. You can go back 3-4 years and you saw the cracks of this starting. And I know people complained about firing the head of the BLS, but nobody's done anything about this. At some point, you have to have accountability. But I agree with you, Liz, actually. So this is a weak jobs report, and I think we're in sort of a slowdown phase here. But there are some things happening that I think do set us up well in 2026. Business equipment spending is through the roof this year. Okay,
Thanks to the big, beautiful bill, which incentivized it.
The roof.
Yeah.
First half of this year. Now, you don't see the benefit of that right away. And Kevin Hassett was talking about that this morning when he was on America's Newsroom. He was saying there's a little bit of a leg in that. So I think the hiring picture does turn around a little bit here. And I'm curious about what the Fed does in September. There's a lot of drama. We don't know if Lisa Cook's going to vote. Is she going to show up? I don't know. I don't think she's going to vote for a rate cut if she does. But I'm seeing, Liz, and you're referencing this, your prediction market's 100% rate cut, okay? And more people are saying 50 basis point rate cut, which would be, I think would be a very big deal. Steve Forbes wants 100. We're not going to get that. But there could be a lot of juice in the second half of this year into 2026.
We're going to talk more about Lisa Cook later in the hour, so I don't want to get too much into it. But what you're talking about, her vote, if she does show up and she votes to leave rates, on a higher level.
Oh, she's definitely going to do that.
That is what Abby Lowell, by the way, her attorney, is calling the irreparable harm to the outcome and to the Federal Reserve. If you really start to break that down and what they're trying to get at, it's crazy. But I digress. Dagan.
No, you can ask me anything you want. I can tie Lisa Cook into the markets and the Federal Reserve's problem. She's a real estate hoarder because she thinks that real estate, she owns 3 properties, an apartment above the Four Seasons Hotel in Atlanta, a house in Michigan, a condo in Cambridge, and then she apparently lives in D.C., I would assume, because I don't believe she lives in any of these 3 pieces of property.
Maybe she has an
owns.
RV in D.C. or something. That would really round it out.
Yeah, but would you park that? Because you're going to get jacked.
Down by the river.
You're getting
Not
jacked.
anymore.
And you would have
Not anymore, yeah, not anymore.
Historically.
You would have gotten RV jacked in D.C. if you were trying to live in your mobile vehicle. But she's a real estate hoarder, and it speaks to the inflation problem that is the mania in asset prices. That you can't, this is how you get rich. That somebody owns 3 properties because real estate's going sky high. So the economy, the job market is weakening, but you have inflation expectations are still elevated compared to where they were before the pandemic. The 5-year inflation rate break even was 1.6 before the pandemic. Now it's 2.5. Mm-hmm. And so it's still slightly elevated. And you have people who are the Fed's going to cut and prop up this gambling and prop up these asset bubbles. So I think that you're still in a pickle, even though the job market is weakening. And the Fed is clearly going to cut because of what the bond market is telling them to do with shorter-term interest rates. Liz is looking at
I think the real estate industry is kind of in a stranglehold because Powell went from 0% rates to very high rates. There are millions of people out there with 2% and 3% mortgages who refuse to sell their homes because then they have to buy something else at a 6 or 7% mortgage rate. I mean, that has been documented. I think that's a tremendous problem. I think it's astonishing that Jay Powell has never talked about this, has never talked about the inflation cost, to your point, of housing and how it is impossible for young families now to buy a home. That has never happened before. We've never had a time, by the way, when mortgage rates started to come down and property prices went up. That's what's actually, also didn't help the housing industry. It has happened. It has to happen again. We have got to have a rate cut to get people into affordable housing. But the other thing, Dagan, is that in an awful lot of cities and states, you have so many restrictions on building that the cost of building in California, for example, is 2 or 3 times what it is, for example, in Texas, because they've made it impossible to do it. The cost of lumber is the same, cement is the same, but it's permitting, it's restrictions, it's time passing. New York apparently is the slowest place. It takes longer to build something here than any place on earth. And guess what? When you start a big project, it literally can double in price while you're waiting for it to begin. I mean, it's horrifying.
But there's still a bubble mentality, bubble in crypto, bubble in gold, bubble in mini stocks, bubble in real estate. Why does somebody think that a Frank Lloyd Wright house that needs God knows how much work is worth $2.1 million in Florida? In not southern Florida either, but in Tallahassee. It's just not
what the market will bear.
Well, they think we're going to get a socialist mayor here and that everybody's going to flock there again and buy it up.
Right, but that's a bubblicious market. I say that because I know what it's like to try and renovate one of those damn things.
Adam, you put all of this through your blender. You have to make investment decisions every day. There's a lot of uncertainty out there. Dagan's talking about bubbles, and she's not wrong. So how do you synthesize all of that?
I'm very comfortable being fully invested. And look at corporate America. We've now had 4 consecutive quarters of either double-digit or very close to double-digit earnings growth. And over the past 3 quarters, we've also seen margins incredibly, despite all of what we're talking about, despite all that, margins have been near record highs for
Well,
the
probably
S&P
because
500.
of what we're talking with the job not hiring actually helps your margins. I mean, that's one of the secrets in this. Is
well, but
companies
there's also been
holding costs
inflation
down by not hiring.
Well, there's also been inflation that has been stubborn. There have been tariffs. There's been some uncertainty because of both of those, and yet corporate America is making a lot of money. So I'm very comfortable being fully invested. I talked a few moments ago about this being a golden moment to invest in this country, and I'll tell you what, I think it boils down to 2 things. There are 2 stimulus programs happening right now. The first, $17 trillion. You and I have talked about that number, Brian. $17 trillion in foreign direct investment since Inauguration Day. All these other countries and companies from other countries bringing money into the U.S. That's like a stimulus program. $17 trillion, that's the equivalent of half of U.S. GDP. And then the second program is what's happening with AI. Just spending by the big guys, the Mag 7, on AI, their investment this year is about $320 billion, and that's forecast, based upon what they've told us, to go to $420 billion next year. That's another stimulus program. So when as an investor, and when I look at the backdrop of money flowing into this country by those 2 methods, other countries, other companies, and then AI here and there, I'm very, very comfortable being fully invested. That is very powerful.
That AI spending is another bubble.
Well, it could be.
I saw that coming the moment you said those numbers, man.
And yet, some of my AI stocks are trading at 20 times earnings. That's cheaper than the S&P 500. So you can buy the S&P at 22 and get 10 to 12% growth, or you can buy some of the AI stocks at 20 and get 35 to 50.
Forward E? Is that forward earnings?
No. I don't invest
in trailing,
in forward.
So it's trailing.
Oh,
earnings.
forward. Oh, it's the Southern
earnings.
accent.
Forward.
I thought you said forward earnings.
No,
That's what I thought. Actually, I thought that too.
Forward.
I look at I look at forward. You're absolutely right. I look at forward.
So your E is ephemeral.
Is different. No, I'm generally pretty comfortable. NVIDIA keeps beating, and they'll continue to beat, as will a number of these companies.
Isn't it funny that we haven't even talked about AI in relation to the jobs number? Why isn't anyone talking about this? I mean, it is having an impact on hiring.
That's what I'm trying to say is margins have been good because companies they're not firing, they're holding down hiring, and they're trying to figure out how AI can make up the difference.
They're not trying to, Brian, they're doing it now.
Well, they're doing it.
They're doing it.
But in certain industries, I'm not sure it's become totally ubiquitous yet. But they're on the way. I'm not going to argue.